Hey guys, what's going on? Coming at you with a Wednesday morning video. So really I just want to caption this title basically saying Wall Street. So the reason I want to do that is because it's just so funny if you listen to like CNBC or read Bloomberg or read a lot of these hedge funds or basically big money and their mindset and where they think the market's going to go and how confident they are. It's so funny to me. So if you haven't watched my previous videos before, I'm a long-term investor. I believe that's the best way to gain wealth. It's next to impossible to time the market or time the bottom or time the top. So that's why I don't like day trading or swing trading. I think this is the safest and best way to do it. You buy your favorite companies and you go from there. So in this video, I'm going to talk about just the indices, some stocks, and then basically some things that happened in the past week. So bank earnings kicked off the end of last week and the beginning of this week. Turns out, everyone thought that the consumer was going to be pinched in money. They weren't going to spend. People's balance sheets are going to be out of whack. Jamie Dimon from JP Morgan, he's came out publicly saying we're going through a hurricane. This is real bad. People aren't prepared for it. Everyone needs to brace themselves, this and that, trying to fearmonger basically everyone in the market. He's been saying that since June, July, August, September. Basically every single month it's gotten worse and worse. You, the Federal Reserve, basically scaring everyone. They're talking every other day, it feels like at this point, trying to say how we have another 15, 20% more to pull back. We're going to keep tightening, blah, blah, blah. So everyone is just super scared in the market as a whole. But in reality, you have to remember, retail hasn't capitulated like times before, all summer and all fall, basically early fall. So I think Wall Street and big money is getting a little frustrated because how they like doing things is they like scaring everyone. Everyone gets out of the market when you really should be buying. Wall Street loads the money in, and then from there it rallies up, and then Wall Street or retail investors buy at the 75 percentile to 100, and then Wall Street takes their profits, and it's a never-ending cycle of them always winning. And that's why you have Wall Street and big money saying, hey, retail investing doesn't work. You should let us handle your money. So that's really how and why it happens, because retail typically sells at the worst times always. That's just how it is, which is silly because if you understand how things work and understand fundamentals and what Wall Street's trying to tell you to do, you just don't do it, and that's basically in the meats and potatoes and in summary and basic stuff. Like that's what you don't want to do. So bank earnings were great. So Q3 earnings made it through it. I'm sure people are gonna be like, well, what about Q4? What about the holidays? Are people gonna buy as much? What if unemployment starts going up? What if the Fed keeps tight, they over tighten, which they probably will. What if we go into a recession? We're already in a recession. A technical recession is 2 negative quarters of GDP. Q1 2022 negative, Q2 GDP of 2022 negative. That's a recession. So there could be other reasons why some people are saying we aren't or we will. I know Bloomberg came out saying that there's a 100% chance of a recession in 2023. Well, thanks for pointing out the obvious because we're in one right now. But anyways, that's a whole other point. Credit cards. So American Express, Visa, MasterCard, they all reported their Q3 earnings. People are still spending money. They're paying their balances. Obviously, if we go into a recession or employment gets high or something like that, we're going to have to watch if consumers are paying their credit card bills. As of right now, they're good. So check that box for banks and credit cards that reported in Q3. The consumer sentiment, it's basically at historic lows. Most people are bearish. They don't think the market's going to rally within the next 6 months or maybe even a year to some people. But every time when the consumer sentiment was low, dating back to when it's been tracked, it's always been long-term the best time to buy. So when consumer sentiment's low, which it is now, you should be buying stocks as a long-term investor. So that's good too. The past 2 months, the market, the S&P, NASDAQ, and Dow have pulled down double digits. Like all of them are 10% plus negative. I think the S&P pulled down like 15 or 10%. NASDAQ pulled down like 18%. So they all pulled down massively. That's not normal in a normal market. That's just capitulation, a lot of fear. People think the world's coming to an end. The VIX is 30 plus. It's been sitting at that, which is the volatility index. In a normal market, it sits in like the low teens. So the market is super stressed and uncertain. So the VIX is high, insane pullback. And that's what happened there basically. So that's not normal. Usually it's a good time to buy if you're a long-term investor also. So check that. Netflix, this was like the first like large company other than like banks and credit cards and stuff like that that basically reported. Tesla reports today, but last night after the bell, Netflix did pop 12.3%. They basically killed their earnings. And you have to remember, like 12% is a huge move. It just shows you how oversold the market is. Obviously, Netflix is doing a lot of changes with their advertising subscription $6.99. They'll have their premium one and stuff like that. So a lot of people are caught in the middle where they think it's more of a value stock versus a growth stock now based on what direction they're going. But whatever, that's I don't own Netflix, but it just shows you how much a stock can pop. And mind you, this stock is a $107 billion market cap. That's a big, big, big stock. Like that's not a small company. So just picture when this guy reports, these guys over here, they're sub 20 billion, like way under 20 billion. So they're 5 times smaller and this thing popped 12%. So it just tells you that Wall Street is now flooding money in because they see it's oversold, it's not as bad as expected, and they have to react. They have to beat the indices. Let me see where I'm at here. So yeah, so I'm just seeing all good things so far. Tesla is going to be kind of a wild card, and that's a tricky one. I'll make a video tomorrow about Tesla and explain my thoughts on why I think that one's a tricky one because there's so much global stuff going on with that company as far as like production and stuff like that. But anyways, I'll make that video tomorrow. Dow yesterday was up 1.1%. S&P was up 1.14%. NASDAQ was up 0.90%. My portfolio was up 2.29%. So I did beat the market by double or triple, depending on which one you're looking at. So I'd say double because I usually compare it to the S&P. So I did double up. I did outperform the S&P. So these are 3 positions that I hold. Affirm is a top 5 position of mine. It did raise yesterday 8.52% off really nothing, just off probably just the Netflix and the sentiment on what the market is, how it's so oversold. Shopify, this is a stock I've owned for a while. This one popped 5.9%. Again, no like crazy news or anything like that, but I think when you add up credit cards, banks, and then like Netflix, which is a subscription service, like Shopify should be doing well if all these are in check right now, which they are. Carnival, CCL, I've owned the stock since, 2019, I believe. So this one popped 12.38%. So these 3 had really nice gains today. If you haven't watched my previous videos, I own 17 stocks. These 2 are top 5. This is a top 10 one. So what my plan is for the next couple weeks, obviously we have the mid-elections coming. Historically, November and December are very, very, very good months for the stock market, especially in mid-election years. I think the market is set up perfectly for a winter rally. That's just my opinion. Like November and December should do very well. So my plan is I bought heavy in June, July. I bought heavy in September and the beginning of October. I bought extremely heavy. So my plan right now is just to cash up. I'm just kind of waiting. So if the market keeps going up, great. I'll keep making my cash position larger, larger, larger. In my case, 90% of the stocks I hold, I'm totally content with their size. So I'm kind of fully in. If the market pulls back in a massive way for some reason, I will buy more of my favorite stocks. I will make videos on which ones I buy and what percentage of that stock I bought. So I will do that. But really my plan right now is kind of just see how Q3 earnings go. If the market keeps rallying, great. If not, I will buy. So that's kind of where I'm at. That's my plan. Wall Street's, it's just funny how they are, and it's crazy how many people let their emotions get to them, especially when things are real crazy in the market. So if you guys like this video, make sure you guys subscribe. I'm trying to get to 1,000 subs by the end of this month. Might be a little hard. I think I'm like 50 away. But if you haven't subscribed, hit that button down there. It's much appreciated. Let me know your thoughts on the market. What are you buying? What you like? How do you think Q4 earnings are going to go? Do you like any of these stocks here? I know Carnival's kind of a mess because they're in so much debt, but long term, I think they'll be all right because cruises are something people love and they love traveling. And that's going to be a big thing in 2023, in my opinion. So that's all I got. Till tomorrow, peace.